You guys probably clicked on this video because you're not profitable and you don't like your trading results right now. So in this video, I'm going to fix that in literally a couple of minutes. One of my students, I gave him this exact framework, this exact system that I'm going to be giving you guys. He was unprofitable for months. And in literally 2 weeks, he became super consistently profitable. He made like $3,000 in 2 weeks, and his P&L graph is still healthy to this day. All right, so numbers don't lie. So what is the first step? The first step is seeing the stats. How do we track our stats? That's the first thing, because if our stats are terrible, then our P&L graph is literally going to look like a flat line or even worse. So the numbers don't lie. So what is the first thing? The first step is our win rate, right? We need to know our win rate. So we have to have our win rate in hand. The second step that we're tracking is our R multiple. Now, if you guys don't know what that is, I'm going to explain it after these steps. The third thing is going to be our risk to reward. And our fourth thing is EV, expected value, how much we can make every single time we put in a trade. That's one of the most important steps. This is the bare minimum. Everyone should have their stats. Now it's about how we apply it. How are we going to use these stats to improve our trading? Because you guys already have these stats. Well, the first thing you're going to notice is that you're a terrible trader on paper. So every dollar you put in to your trading account is every dollar that's going to be lost because you guys suck at trading, right? Your numbers literally tell you that you suck at trading, but I'm going to turn it around, right? So let's say your win rate right now is a 30% win rate. Your R multiple basically means how much we make based off our risk. So if we're risking $50 per trade and I'm up $200 in the week, I'm up 4R. That's very important because that allows compounding. Now, the risk to reward, basically the same thing here. Every single risk, what is your reward? So if I risk 1 and I get 2 back, that's a 1 to 2 risk to reward. That's very important. We need to make sure these are all tracked. If you're watching this video and you don't even have any of these stats, you guys have to go be doing that first and then come back to this video. So our win rate, 30%. I'm going to put 0.30 times that by our average risk to reward. So our risk to reward is a 1 to 2, so it's going to be 2. Now, we need a minus our loss percentage, which is 100 minus your win rate, so it's going to be 0.70. So for the EV with these stats, here is a simple formula that we're making here is the win percentage times your average win, so that's 2. If we're at a 1 to 2 risk reward, it's going to be 2, minus your loss percentage. So whatever your win rate is, minus 100 will get you that 70. So 0.70% of the times you lose, so you're at 70% there. And then times that by your average loss. So our average loss is 1 for the 1 to 2, and then that's that. Then we add this all up, and we get 70, and then we get 60. So what is 0.60 minus 70? Minus 10 R. So that means every single trade that I make, every single dollar that I put in, I'm going to lose 10 cents every single time I take a trade. If you guys don't know what that means your P&L graph over time is going to look like this. Right? It's probably going to look like up, down, up, down, up, down. Like it looks like that. Either way, this means that you are a losing trader and you need to do something different, right? So what expected R do we need? Let's take my stats, for example, this week. And you guys can do it this way, where you put the R multiple, so how much you guys are up R, this metric right here, over how many trades you take it. So if my R multiple this week is 4, and I took a total of 7 trades this week, that equals 0.57 R. Now do not get this confused by the R multiple or the risk to reward. This is the compounding effect. This is what your P&L graph looks like every single time you take a trade, whether or not you take a win or a loss, because this is just over time. So every single trade that I take, I'm going to make 0.57 R, which is extremely good. Anything over 0.4 R per trade on average is amazing. Do not mix that up because I make plus 3 R on my winning trades and I lose 1 R on the losing trades. This is over time. This is the average. This is how we know if we're a winning trader or not. So I make plus 57. S&P Capital would hire me instantly, but I don't because I have my own money. 0.57. That means over time, my P&L graph is going to look exactly like that. Now, if we get closer to maybe like plus 0.10 R, that's pretty low. You're really close to that 0. That means that you're like basically right here. It's not as profitable as you guys can be. So that's a first metric that we need to solve for. What is our total R every single time you take a trade on average? That's how you know how profitable you are or aren't. This will tell you how much your profits will compound. I took a total of 3 winning trades this week. 3 winning trades out of 7. That means I lost 4 and I won 3. Not the best week at all, but it gave me a 43% win rate. But the thing here is my average risk to reward is absolutely insane. I think it's like 1 to 3, 1 to 4 right now this week, something like that, which gives us a total of 0.57 R. We're going to input your numbers right now because numbers don't lie. If you guys have anything less than like 0.2 and under, 0.3 even under, you're not as profitable as you can be. Like our system, my mentorship students, I'm just judging it off of that. They're at like 25 to 35 R on average per trade, sometimes even higher depending on the week. This is where we need to be. We need to be up there and we need to be plus R. If you're at plus 10, you're just putting money into the market and thinking that something's going to change. Whatever you're doing right now, your stats are completely wrong. Numbers don't lie. Nothing changes if nothing changes. You guys got to remember that. Nothing changes if nothing changes. Your stats are always going to look like this, or it's going to look like this, or it's going to look like this, something like this. And these aren't good, right? We want this. Or else we're just putting money into the market for no reason and we're not optimizing every single trade. So what do? First step is we need to see our R multiple for the week. I'm up plus 4R. We also need to see our win rate. Lower win rate does not mean you're not as profitable, right? So I know a lot of people that are 40% win rate, 30% win rate, and they're extremely profitable. And I know people that suck at trading and they're at 80% win rate somehow, and they're barely profitable. Why? Because their EV is low, their risk reward's terrible. They literally have a negative risk to reward somehow. Like they're literally 1 to 0.05 or 1 to 0.5. It's super low. So the first step is, especially for how I trade, our risk to reward needs to be over a 1 to 2 risk to reward for how I trade. If you don't trade like me, then you're not doing it right. 1 to 2 risk to reward for the way that we trade. Our win rate at least needs to be over, like, try to get it over that 50%. Really important because this will allow compounding. Your win rate is very important because this will allow your risk reward to compound. What does that mean? Let's go over here. If I have a 1 to 2 risk reward but a 30% win rate, that will make my losses compound against me. Why? Because we have a winner, we have a loss. Winner, loss, winner, loss, winner, loss, winner, loss. Right? We're losing so many times, barely winning, which doesn't allow our winners to go anywhere. Right? It doesn't allow our winners to stack on top of each other and compound. Now, if we get our win rate up even a little bit, right? We go from, and I'll literally show you guys a graphic. You guys will be able to see a graphic right there. Even if we move our win rate up a little bit, we go from here, winner, winner, loser, winner, loser, winner, loser. This is a 50% win rate. Winner, loser, winner, loser, winner, loser, winner, loser, winner, loser. This is a 1 to 2 risk to reward. So this is double the drawdown, double the drawdown. Way different with the same amount of trades. You're literally like 200% increase to your profits just by increasing your win rate just a little bit, right? It's all numbers. You guys can see the chart right there as well. Now, if we get this to a 1 to 3 risk to reward, but we keep the win rate down to 30%, like barely any movement, right? We're not going anywhere. It has very high explosive opportunities here, but there's nothing for it to continue off of because the foundation under it, every single time it takes a loss, it just kills it. Right back up, kills it. Right back up, kills it with that win rate. Now, if we had a 50% win rate with a 1 to 3 risk to reward, 3, 1, 3, 1, 3, 1, 3, 1, 3, 1, 3. Look at that difference. Another, let's just say 200%. So you can literally increase your profits from here to here 400%. Just by moving the metrics around a little bit. And this is only a 50% win rate with a 1 to 3 risk to reward. Imagine we get it to 70% win rate, right? It's 3, small loss, 3, 3, small loss, 3, 3, small loss. Like we're even up higher, right? Again, you guys can see the graph right there. It's all about numbers. Now, what do we do from this? What do we take some actionable steps here? Listen, if your win rate is 30 to 40%, it doesn't matter right now because the main focus here is getting the risk to reward up. A win rate, a high win rate, don't matter because if you don't have this metric down first, then you're just compounding for no reason. Like, there's nothing there. You're not optimizing the trades correctly. So for how we trade, we usually lose around 5% to make 15%. So on average, it's going to be around 1 to 3 risk to reward. Sometimes it's like 1 to 2.7. Sometimes it's down to 1 to 2.5. Whatever it is, it needs to be over 1 to 2. For how we trade, it's very, very easy. So that's the first step. So if you're watching this and your risk reward is 1 to 2, that's the first. If your win rate is under 1 to 2, this is going to be the first step that you guys need to take. Now, if your win rate is over a 1 to 2, recalculate that EV. If that EV is still like 0.10 or something like that, then your win rate needs to start to improve. So once we get this win rate to improve, we want this, if it's not at least around a 50% win rate, that's your next step. Once you have that win rate up to 50%, your risk to reward up at least 1 to 2, 1 to 3 even, you'll start to see that there's a system here. Now you're starting to be profitable because 50% win rate with a 1 to 2 risk reward. 1, 2, 1, 2, 1, 2. This will protect you from any drawdown because it's going to happen. You're going to have a very slow week sometimes, and then you're going to get back down to here, but you have this entire cushion. It doesn't wipe out your entire month. It wipes out a couple days, not even, and then you're right back up. Right back up. That's profitable trading. This is not. This with a low win rate is not. The way that we trade, we can get away with a lower win rate, but imagine having a high win rate with how we trade. It gives you a cushion. And this is all just numbers. It's a systematic way of trading. Numbers do not lie. Nothing changes if nothing changes. So you guys know exactly what you guys need to do. And if you guys don't want to pay for a journaling software, I literally am giving you guys a free journal template down below, as well as a free PDF of the 3 steps to become a consistent trader in 7 days. All for free down below. If you guys enjoyed this video, make sure you guys subscribe, and I'll see you guys in the next one.